1, 2, 1, 2. All right. So this morning, for low floats, I'm seeing Xpon, GORV, and Ruby. So I guess we can look over what I did yesterday. Yesterday was so stupid. I had my cash in pocket and just didn't walk away quick enough. Playing around in the low floats. So let me go over here to research. Okay, so over here in my trading journal, yesterday I took a trade on LVLU, and I gave myself basically 25 cents of risk, looking for 30 cents to the upside. The thing that I'm seeing is on weekdays or cold days, I gotta be okay with 15 cents. I gotta be okay with half of what I usually get. I got the 25 cents or whatnot, and I was like, I think it can hold. I think it can go a little bit higher. So over here, let me see if I had a chart. If it has a chart on here. It does. So basically, what is this? 15. Yes, 15 minutes. Go to the 1 minute chart. Basically, yesterday I was like, okay, let me just I'm gonna get a little move here. Where is the okay right here? So right in here, I bought a little bit, added, and I let this thing move around on me. It went all the way up here to 594, and I was looking for it to start to hold 6. So I got in, holding through here, still holding, looking for that break of 6, break of 6, break of 6. It came up here to like 609. I was like, okay, we're about to get the breakout. Came down just a little bit, went back up again, about to get the breakout. And let me tell you, yesterday I was working and trading. So right as this secondary move was happening, I got a call, and I was like, okay, well, let me get this call real quick, see what they want. And it was right on these 3 candles here, a 3 minute call here. And as soon as I was like nearing the end of the call, it was like whoop, straight down. So 603 all the way back down here, and I was like, oh man, come on. So ended up getting stopped out of this one, but I had my risk already managed. I was risking 25 cents for 30 cents up, but I should have just, on a slower day like this, I should have just took the profit. But it is what it is. Because I know usually after a nice little in the market yesterday, oh my goodness, it was dropping. I didn't think it was gonna stop dropping. Actually, it's still dropping. Actually, never mind. So over here, we are still in free fall. So yesterday we had talked about maybe this being a possible level that would hold this 25 whatever 25,000. It absolutely did not. Fell from 25,500 all the way down here to 24. On the first, like as soon as market opened, on the first time it got the test, it just fell through. So yeah, yesterday's market was kind of sorry, but it's okay. I had my risk managed, and I feel like it was a even though I didn't take the profit, I was like up 110 maybe or something like that. But I was like, but lost my expected loss down there on the downside. Really should have took some off, but it is what it is. Just didn't want to lose like, 400 bucks to the downside when I was risking right around 70 bucks to the downside. But today we have for the high floats, Nvidia, Tesla, and Irene are up here. All of them are red on the day, still going down with the market. So let's jump over to our news and see what's going on over here. Bitcoin's bear market deepens. Oh, let's look at trading view. What I need. Yeah, Rex Con. Yeah, I should have just took the profit, man. As soon as I seen 110, 120, I should have been like, oh, that's my $100 for the day. Let me get on out. Look at trading view. Ooh, that Bitcoin is into a dip. So I'm going to be preparing to see where this thing dips to and look to add to some positions, but not right now. This thing has come under 100K. Previous levels that were traded, I mean, it's got the 70s down here. I don't know if it's going to come to the 50s, but it's got the 70s. So we'll see. I'm going to just focus on, until Bitcoin slows down, I'm going to focus on my stocks, because my stocks that I bought are still performing well during this time. So I think I feel pretty confident in the longer term stock plays right now. Crypto, I'm going to give it a minute. Give it a minute to see if it wants to come all the way back down here to 81s or something like that. And then think about trying to add to something. But yeah, let's go back over here to the news. Whoa, where am I? To the news. Okay, so a recession is brewing at the bottom of the K-shaped economy. Bitcoin's bear market deepens as ETF investors yank 870 million. Bitcoin's bear market deepens as ETF investors yank 870 million. Boy, that looks like a rug pull. Tesla stock falls as Musk pay package sell-off continues. So we got Tesla. Tesla is already up there. Meta, Google buries depreciation gripes, shines spotlight on big tech profits. Applied Materials falls. Oracle hit hard. Rattled bulls look to strong earnings. Risk aversion sinks market. High flyers as Fed cut hopes dim. No playbook for AI bubble fears. SAP has offered concessions. Toy makers rush into blind trend for holidays. U.S. praised trade talks with Swiss as deal awaits Trump's sign-off. The affordability crisis is forcing Trump to radically reshape his economic plan on the fly. Gold set for best week in a month. Oh, wow. Well, if gold is up, people are worried. People go and run to gold whenever things get shaky. So gold is up. Jaguar Land Rover's UK production returns to normal after weeks-long cyber shutdown. Okay. So lot of bearish news on the market for sure. Let's see. A lot of bearish news.
Industry, charting new territory in cryptos and Bitcoin. What do you think about the likes of a Jim Chanos and others like him that are trying to profit off of you not doing so well?
I don't really think about Jim Chanos. I think that there'll be some skeptics. They don't really appreciate what Bitcoin is doing. They don't understand digital capital. They don't understand digital credit. But at the end of the day, the big dynamic in the industry is digital capital has gone from nothing to $2.5 trillion over 15 years. Digital credit didn't exist 12 months ago. We've issued nearly $8 billion of digital credit. Digital credit is got a tax equivalent yield of 4 times higher than bank credit. You know, you can have a bank account, in New York City that pays you 4% and it's taxable, or you could buy something like STRC that pays you 10.5% that's tax deferred. So the market's evolving, and the short sellers aren't really interested in the impact of AI or the impact on digital assets to change the way the world works. They're just interested in being skeptical as a business. So I don't really focus on them. Nothing.
Okay.
Your outlook for the economy next year, what do you see, Keith?
Well, a punchline is an uptick, and it's a modest uptick. As you just discussed, it is a two-speed economy. It's a two-speed stock market as well. But the way we're thinking about things and why we expect at least a modest uptick is based on three things. One, we do expect the Fed to cut rates modestly over the next year, so that should be a positive. We have this tax bill that was passed. We should see some incentives and some positives in the first quarter as far as for the consumer and also businesses. And then hopefully we'll also have a little bit more clarity on tariffs. So you put that all together, that suggests to us a modest uptick, maybe a little bit above 2% as we move into next year.
Some of our central bankers, when you listen to them right now, it doesn't sound like that cut's a sure thing. Some of them seem to be saying, listen, that 2% target, it's a target. It's not a suggestion. I just wonder if next month you don't get the cut, how would the stock market react, do you think?
Well, right now the market is pricing in about a coin toss, and I think that's probably about right. And to your point, they have scar tissue from the inflation before. They're in a tough position. So I think initially you could have a bit of a hit, and you probably would see that more in the small cap and more of the interest rate sensitive areas. But I also think that for this market, the most important thing isn't whether the Fed cuts in December or January. I really think it's about corporate profits. And what we've been saying all this year is that the North Star of this bull market is corporate profits. As the stock market has made a new high, corporate profits has followed. Now we have to see, is that sustainable? A lot of that is driven by tech and AI, but we have seen that burn out as well. So I overall, again, I think the interest rates moving down matter on the margin, but it's not the make or break for the bull market. I think profits ultimately will be, and if we do see a little bit of an uptick or this muddle through that you just discussed continues into next year.
Look, on Tesla, this, in my opinion, is the most important chapter ever for Musk and Tesla, the AI chapter, autonomous and robotics. I think we're talking 2-3 trillion in terms of market cap, best physical AI play besides NVIDIA. When it comes to NVIDIA, the godfather of AI, there's only one of them, and that's Jensen. And look, demand to supply is 10-1 for NVIDIA chips. Get the popcorn out, get the watch parties out for next week's earnings, because this, in my opinion, is going to be a $6 trillion market cap in 2026. And again, the bears will continue to yell from hibernation caves. They'll be wrong.
All right, they'll be wrong. You heard it here first. But let's get to some of our social questions. And I want to start with Tesla. One social viewer asks, Tesla seems to be a show me story with investors all in on robo-taxis and automation, but that seems years away. How much patience does it take to be a Tesla shareholder?
It takes a lot of patience. And we've talked about it so much, on Yahoo and on the show, because this is when you have to have the understanding of what Musk and Tesla are trying to do here. They're building out the AI future. Autonomous, they're going to own 80% of the autonomous landscape, in my opinion, over the next decade. Robotics, Optimus, that's what you're playing for. It's less about deliveries. It's more about the AI future. You have to be patient, but it goes back to this, in my opinion, is going to be the most important chapter ever in Tesla's story.
Okay.
I wanted.
So, jumping back over here to low floats and all of that. And between low floats and high floats are actually looking like they're catching up with all of the low floats right now. NVIDIA has 3 million shares. Xplan is leading the low floats, only $1.67 with 7 million shares. But with these low floats already having this much volume at the beginning, I think it's gonna, not low floats, these high floats already having this much volume at the beginning of the day. It's a lot of people more focused on the larger cap world right now. So I'll be very vigilant on these high float, high range movers that can suck up volume. Low floats, I'm not really seeing anything higher priced. I gave up my opportunity yesterday, had the green in pocket, or not in pocket, but had the green on the board. But yeah, I just didn't take the profit. Got a little greedy. But I still followed the plan as far as getting out. So let me see. Xpun, yeah, let me go and look at what they got going on over here. So Xpun news. Xpun had news from yesterday. I believe today's the 14th. Yeah. Yesterday. Xpun third quarter sales is a little bit of earnings, but it's a cheaper one on earnings, so it's really not just killer. Only up 31%. Let's look at GORV. Doesn't even have news from yesterday. No catalyst on today. Only up 10%, and then Ruby up here. So nothing with catalyst on the small cap side. As far as Nvidia though, go look at Nvidia. So we got market chatter, social buzz, Netflix's okay, that's Netflix. Netflix's stock split. Nvidia backed firm Firmus said Friday it has received commitments for an additional 500 million Australian dollars equity raised to expand Project Southgate. Okay. I mean, it really doesn't matter at this point. We need to see some green. Like this market just continues to take us down, but I don't know how long it's going to be. Let's go over here and look at the overall market, where it actually is in terms of the last correction. So this last correction was down here to 24,709. It's almost right back down to this level. So will we see any kind of comeback at the end of the week or what? Because we are usually Friday is a sell-off day, right? But now before Friday has ever even happened, we're into a nice downtrend. So we're going to see what the markets want to do on today. And I'm just with the headlines that I see out front, they're all bearish. So I'm like, we'll have to see how the market plays out. You kind of have to give it what it's due, give it what it's showing you, believe what it's doing, and just get out of the way if it wants to continue downward. Okay. So Trump brothers backed American Bitcoin's quarterly revenue more than doubles. Okay. 7 minutes ago. Xpun. Yeah, Xpun is just looking like a chop factory.
In this conversation, Mohammed, because you are known as a foremost thinker on Federal Reserve policy. It has been quite the year for all things Federal Reserve. Of course, attacks from the Trump administration. We're coming up on the end of Chair Powell's tenure. Where is your head at as it pertains to the Fed in 2026? What is a new Fed chair? What will they bring? And where do you see the ultimate end game for rate cuts this cycle?
What a new chair will inherit is a divided Fed. And it's divided by two things. One is whether they are sensitive to the employment side of the dual mandate or to the inflation side of the dual mandate. Both are flashing yellow right now. So it does matter where your bias is. And what we see is that people are on both sides of this divide. The second thing that they will inherit is a division between people who are totally comfortable being backward-looking, so-called data-dependent, and those who realize they also need to be forward-looking. They need to have a strategic view of the economy, and in particular, Brian, of something you've been talking about a lot, AI and its impact on productivity and growth. So what a new chair has to bring is a unifying narrative. And I think that narrative has to be forward-looking. And the new chair has to have a view as to what the future economy looks like. I am a great believer, as you know, in the promise of AI. If we get diffusion right, we will have a significant productivity increase. And as a result, monetary policy will be able to be looser than it would otherwise have been.
Do you view the attacks on the Fed and what it does for the administration, will that leave lasting damage on this institution? And if you do think that's the case, what does that damage even mean to markets?
So I believe deeply in the independence of the Fed, deeply, that I think a Fed with policy autonomy is the best thing we can have. But I also believe, as you know, that this Fed went to sleep. There are many areas of reform that require attention. There are many best practices that from the rest of the world that we should be looking at more seriously. And there's lots of hard questions that we need to ask, including what is the right inflation target in a structurally changing economy. So the good news is you're starting to hear debate from within the Fed. You've had two Fed officials, as you know, come out and saying, maybe we should have a range for inflation, our inflation target, not a point estimate. You've had another one come up saying we target the wrong intermediate policy variable. So I'm encouraged by the fact that the Fed itself is now finally talking about reforms. And that is something that, if you look at the 5 candidates on the short list, all of them understand that you need to reform the way the Fed operates. Otherwise, the Fed will continue to be behind. And if you look at the recent years, not only have we had decisions that were too late, but we've had a culture issue. We've had 5 officials that were accused of irregularities. So I think it's really important to reform this Fed. And what this political pressure has done is it has made certain Fed officials realize that it's better to reform from the inside than to have it imposed on you.
The 5 contenders you mentioned on the short list for the next Fed chair, do you have confidence that they will keep the Fed independent?
I do. I think all of them understand the history of central banking. They understand the importance of keeping the Fed independent, but they also understand that an independent Fed needs to be an accountable Fed, and an independent Fed needs to reform itself to keep up with changes. It is striking to me, Brian, that we don't have external members serving on the FOMC, like the Bank of England does. So we end up with groupthink, and that groupthink ends up by the Fed being behind. We saw that in 2021, 22, and we've seen it again this year. So there are things that can be done and should be done. And I think that all 5 realize that an independent Fed is critical, but it doesn't mean a Fed that goes to sleep.
Good morning, Andre. So we're looking around the markets and looking around the news, and pretty much everything is showing a very strong bearish sentiment. So if we do get a small cap that is moving up against this, I'm probably going to see if it's going to be a hype, something that's on hype, or is it something that's actually going to hold up. But being Friday, the chances that news actually drops on today is going to be very rare. It's going to have to be something that's absolutely bucking against the market. Everything is out here showing red. S&P futures, Dow futures, NASDAQ, Russell, VIX is up, but that's an inverse. Gold, I'm surprised, isn't really up right now, but I think after the market opens, people are going to go and crush over there in the gold because of how the markets have moved down. We are almost to the correction point that we reached the other day at 24,709 down here on what was that, Saturday, going into last week. Friday came down to this level, went up a little bit, came right back down to this level. So this is our second time being right here at this 24,700 there. So yeah, I think overall I'm still green on the week. I did pull back out. This has been a very weird month for sure. We've had a lot more cold days than hot days. What I mean by cold days is stocks that actually have catalysts. Now, we've had some days like yesterday, I traded LVLU, but it didn't have a strong catalyst. It had like earnings from the previous day. And but it met like my price that I like. It met some other factors. But on these cold days, I got to adjust my strategy a little bit. Because on hot days, 30 cents is easy to get. But I think on these cold days, just aiming for the 15 cents is cool. Just cut it in half. If I see that the markets aren't giving me a good catalyst, but they're providing me with something that could give me the range, but just without the high inflow of or liquidity or volume, it's like, man, let me just cut my expectations in half. But if we're seeing things back up, 100%, 200%, because LVLU yesterday when I got into it, it was only at 17%, and it went up to like 21% or something like that. And I was looking for it to kind of get a little bit higher than $6. It got to like 610, but I was looking for a target of like 640 or something like that, and it just could not do it, could not break out. And like I said, I just got a little greedy. Should have took my little $110 and ran, but it's like that. All right, so it says Trump is readying big tariff cuts to ease grocery prices. What do I mean by 15 cents OT 30 cents? So 30 cents is my average winner. When I'm winning, 30 cents per share is what I'm usually getting on my trades, right? But I'm thinking in these colder markets to cut it in half, because I'm getting in the cold markets, I'm getting 15 cents. I'm getting 15 cents, easily. So I'm like, okay, I think I need to start at least taking off profit, taking off some type of money in these colder markets. It's just an adjustment for colder markets. It literally took me, LVLU took me up to 25 cents, and I was like, okay, well, we're about to probably get the rip. We're at the highs. Let's just get this pop. Couldn't do it. Well, it did a little pop, but it just couldn't hold. 15 cents OT or 10, 30 cents. Yeah, I'm just talking about the per share value. So basically that's how I set my risk. So let me see. Andre says, so if you buy for 1, you sell for 130, or at least yes. Except I would never look for a dollar stock to give me a 30-cent move. I look at the ATR because most dollar stocks aren't gonna have 30-cent ATRs. You gotta at least have 30 cents in your ATR to give me 30 cents. So a dollar stock, they usually have 15-cent ATRs, 10-cent ACRs. They don't even have the range to give me 30 cents. So I kind of just leave them alone. And that's why I kind of stay above $5. So if I buy for five, like yesterday, I bought for $5.75, right? So right here, this was my entry. So I bought at average entry, yeah, $5.75, looking for 6 to hold, right? When we go over here to the charting here, right here is where, oh, come on, get in there. All right, right here is where we were. So I got in here, bought the 5, added at 5.75. It dropped down. I added a little bit more 5.70s, added quite a bit down here, 5.41s. Then it popped back through, up here to 5. And I actually, this little red mark right here, I accidentally sold 1 share. So I was adding in here for the ride up, and I accidentally sold 1 share, but it did pop up to 5.93. Oh, I'm not even showing you. My bad. Let me get on the right screen. Okay, so I added here 5.75, looking for 25 cents up. Now on the bottom side, I was like, I think that this thing can hold 5.50. Okay, so it came down here, and these were my add positions. I added a little bit here at 5.7, right around 5.75. Added a little bit more at 5.70. Then it dropped. And so this was where the majority of my ads came in, and this is where I accidentally sold 1 share in there. So added down here 5.40, and I added on the way back up 5.57, and then it popped all the way back up, and I was looking for 6s to start holding. So it came up here to 5.93, and I was like, come on, man. Then it dropped back down, but it didn't break all the way down to my low. And so I was just working my stop up as it continued to hold. Came back down here again, did a slight little breakdown. I was like, okay, this one might stop me out. It didn't. Reversed back up, And then we started to see sixes up here. We got 609s. And I was like, okay, maybe this thing can hold sixes. So it's right back up here to where it had previously tested, and it came back down. But now at this point, my stop, I had already moved up to like the 560s, right? So just continue to work it up behind the movement. Then during this time, this is what really messed me up. I was working and trading. And so during this time, right at this new little try up, I got a call, and I took the call. And in these like 5 minutes right here, I was just sitting there with like 100 something bucks and ready to go, because I had got it. My average price was 574, but I had did a lot of entering down here at 550s, and we were up here at 609. And ending the near this call, I was like, oh man, okay, I'm still in the trade. And so as soon as I came back, I see this one, and I was like, oh no. Now I was still okay because it was well above where I had added in, but still I was up here at 607, and then it dropped right back down to 574. And this was a low volume. This was very cold market trading, looking for a range to actually play instead of breakouts. So getting in low, looking for those highs to complete some type of breakout. And this one didn't even have good catalysts. So I was like, if it does break out, this thing's probably going to go crazy. I had 300 and where's my shares? I had 328 shares. Well, I had 27 shares because I accidentally sold that one share, but got in. And if it did break out of here, let's say it broke 610 or whatever, I was already up $100. Up to 620 would have been 10 more cents. Up to my target of 630 would have been, a little bit more cash. 640 on the daily chart. Let me show y'all why I was looking at 640 as my target though. So LV, LU. Okay, so 640. Is this the, oh, this is in the daily chart. LV, LU. On the daily chart, we had this level right here, this previous high of 641 that I was looking to get tested. It was right here at the 612s, came up to 612, and I was like, okay, can we get this break up to 640? Now that move would have been from on 300 shares, that would have been 575 up to 640, which would have been, let me see, 25 cents would have been to the 6, and then plus 40. So that would have been another 60 cents on that 300 shares. So it was about a $300 winner if it could have completed that little cycle pop to the, wait, where'd it go? 360s here, that previous level of pop. And that's where my target was. I was like, okay, because it was trading around this previous target right here. And all I wanted was just a little pop in here to 640, and I'm taking profit. So that's kind of where my focus was. Let's see this little pop of 640, but it just couldn't do it, and I had to get out of there. But yeah, on that would have been a nice little give back, or nice little play there. Little pop through here, 612s. So you can see on the 1 minute chart, this was the 612 that it came up to twice. I didn't get in on this one. I was kind of just trying to find structure here. Then when I started to see some structure, I was like, okay, if this is the uptrend, I'm going to be adding, and this is where I was adding into down here. It came and started building those higher lows, came right up to that 612, and came right up to the 612 twice. And I was just looking, I was like, ooh, just snap it, because I was ready to go. I mean, I was down in here, and it ended up selling off kind of hard. And I was like, well, I'm going to have to get on out of here, because look where it went after this. After it came back down, so first thing I look for is a trend inside of a trend, right? To start holding after I'm entered. So this was the original uptrend, and then this was the trend inside of the trend to hold. When it came down here, I was like, okay, if it starts to break down, I'm getting out of this. And so look where it went though. Went all the way down to 5s. If I was holding that 300 shares all the way down to 5s, I would be looking like an idiot. So got in here at 340s. That's a 40-cent loss on 300 shares. Absolutely not. Not taking it. Now it did come back up to that level of 612, even on even lower volume. So I just had to, bite the bullet, take the planned loss, and it didn't work out. It is what it is. But I know every time that I'm in a trade like this, let's say if I do hold it and it does get me to a $200 loss, well, now I got to dig out of that $200 loss. So I'm like, I'd rather just go ahead and take my regular $70 loss and be good to go for the next trade, because eventually I'm going to get a $200, $300, $400, $500 trade, and I just don't want to have to fight out of the abyss. So yeah, that was yesterday, playing around. Definitely had the profit. Just, oh, I should have took that. Should have took it. But yeah, my trading is focused on statistics. What is my wins looking like statistically? Statistically, 30 cents. What if my wins are statistically 30 cents, I need to look for stocks that can give me 30 cents, at least 30 cents easily, right? So I don't want to get in something that's $1 that's only moving 10 cents, you know, because I'm way too greedy for that. If I know my expectation is 30 cents and you're only moving to 5 cents at a time, or you're grinding around like that, I forgot that stock that One Life called out. It was like a cheaper one that was talking about men's health and all of that stuff. I forgot the name of it, but it didn't perform well. It wouldn't have given me what I was looking for on the day. It was something MGRX or something dealing with men's health, testosterone, hair growth, and all of that. I was like, nah, I'm good. I'll go with a little bit higher price. Even if the risk is more on the higher price one, I'd rather still take the higher price one. All right, so let's see. Let's go ahead and refresh, see if anything new has popped up. All right, Merck agrees 9.2 billion deal for flu prevention biotech Cidara. So Merck is in there. Let's see what Merck is. MRK. Is it a higher float? Yes, it is. And it is also red. It's a $91 per share on Merck. Agrees to a $9.2 billion deal. Looks like yesterday it moved from 91 up here to 94 and pretty much reversed the whole route as the market had continued down. Let's look at the daily chart on Merck. Okay, so Merck was once 134. Let's look back. Okay, so that's looks like the highest that it's ever been is 134. Came down here, had a little gap, filled that gap, came down to lows of 73. And I'm guessing it's like a biotech or something like that. We have 4 stocks here now. So Gore, Acon just popped up. Acon, cheaper stock, $1.50. ATR is 25 cents. XPUN ATR is 11 cents. Now that's from yesterday. That doesn't mean that it's still calculating as this. This takes the previous days. So TOS's default ATR takes the previous day's metrics and calculates ATR. So on the open, these numbers can change. But during pre-market, it just shows you what it closed at. So 11 cents is its average movement during a day on XPUN. Acon average movement 25 cents. So if their whole day is 25 cents, can I expect them to make a 30-cent move? If like Gore, if their whole day is 29 cents, can I expect them to make a one-time 30-cent move? And I'm like, nah, I'm gonna leave that alone. I'd rather just stick to something else and just continue to sit on my hands. All right, on the high floats, we do have one that is green, CDTX, with 1 million shares. This is the only one that I see green during pre-market. Is this an acquisition or something? It's up 103 and it's $215. Hold up, CDTX. What is going on with this one? CDTX came down here from 104 and went up to $218. What? Okay, so over here on the daily chart, look at this. So we came from 17, gapped up to 46. Took a little ride from June up here to 70, up here to, I guess, September with a little gap. all the way up to 120 and now to 218. So it has gapped all the way up here somewhere. That is insane. What is going on with CDTX? So let's look at the news. Says Merck to buy. Oh, Sidera. This is the one we saw with Merck. Okay, Merck is buying it. So it's a kind of acquisition play. I don't know how many people are actually going to trade it because, I mean, it's already made a massive move. Merck nears. Yeah, okay. So that's like the biggest move we've seen so far, and it's in a large cap. Moving over $200 basically. 107 during pre-market or during aftermarket up to 218. If somebody was short on this, boy, they are hurt right now. Hurt. Okay. Interesting. It doesn't have the most volume on the day, but Nvidia is still soaking up majority of the volume. And I just don't see the volume pouring into small caps. Look how still these numbers are compared to high flow. So look, this thing's not even getting trades. Look, one share at a time. Not even thousands of shares at a time on these. So it just doesn't have the volume, the numbers bumping like we need them to. And then on high flows, look at Nvidia. At least hundreds of shares during pre-market, right? A little bit of motion over here in the large caps. So I just take note of all these things and then look for the things that closely meet my criteria. And sometimes they're missing one, usually like one feature of it. Like yesterday with LUV, the only thing that was really missing was a really good catalyst. So I was like, okay, well, maybe people are going to give me a little push over here, but it is what it is. No reason to stay in yesterday, right? Okay, stocks set for another bruising day is the news that just came out. Stocks set for another bruising day. Tech is leading losses again as the slide on the Dow, NASDAQ, and S&P futures picks up pace. Let's go see. Yep, but to close up the week going red is kind of sad. I really wanted a chance to recoup, but this has been a colder market. Video 4 million shares traded. I just really don't like mornings where large caps are leading pre-market, especially to the downside. Like the ship is tanking, man. The ship is tanking. Nvidia, all of the tech stocks, basically Nvidia, Tesla, Palantir. We've read of all of these in the previous mornings. AI, the bubble they've been talking about leading us downward. So if this is the lead, this is where the head is, we know that the Magnificent 10 is where it's at. So when they're diving, it's like, hold up. Let's take a moment of silence. All right, let's go back over here. All right, do we have any speakers on today? So today is the 14th. We do not have any speakers today. We have speakers next week: economic outlook and monetary policy, and economic outlook, bank supervision, financial stability, welcoming remarks. Okay. Then Thanksgiving on the 27th. Coming on to being thankful. Actually, we're always thankful, but on that day, we shall be especially thankful. All right, so let's see. Exclusive team shares to list in US via 746 million T-Row price back SPAC deal. MSTR just got added to the higher floats. MSTR and all of these just looking downwards. Look at the ATRs on these high floats though. Nvidia ATR of $7.52, right? This is why people like to trade these, is because it's like, okay, if this thing is moving $7.52 per day on average, how what's the probability of me being able to pull out 30 cents of this, right? Let's look at Tesla. Tesla moves $21 per day, right? What's the probability of me pulling out 30 cents of that? Irene, $6.94. Palantir, $9.92 average per day. IONQ5 CDTX, and I don't know if this is actually valid because it's done so many gaps, and so the gaps actually affect the ATR as well, and it may end up shrinking back down. But MSTR, $15.83 per day. Like, this is why people, they trade these with range. Now, those with smaller ranges, let's say if it's a large cap that's only moving 25 cents a day, you're probably not gonna get any motion. Probably not gonna get any motion, man. All right. So if y'all are seeing anything else that's popping up that y'all may be seeing that I'm not seeing, please let me know, because right now I'm just living in the Red Sea. All I see is red. And then all the low floats are $1. So not even worth it to me. Wouldn't even pull me off the sideline, man. I need something to tempt me to trade. And these are not going to do it. And that's another thing about statistics, and really getting into the statistics of trading. You actually have an affinity to the things that you win for. So if you know different things win you money, you're like, it's almost like I don't know what it would be a good comparison. If you like a food and you know you like this food, it's your favorite food, right? But you don't see this food all the time. You get it occasionally. You're way more ready to go when you see that food if you only choose to eat that food as your favorite food. Now, if you got a bunch of favorite foods, you got 11 strategies, you got a plethora of things to choose from, your mind's all over the place. But once you start to narrow that down to say, okay, this is what I'm looking for, this is all that I want out of the market. If it doesn't give it to me, I don't want it. That's when you start to be able to just look at it and look at these dollar stocks and these things that don't match up with your statistic and say, it is what it is. Oh yeah, Hebrew, everything's suspect. The whole market actually is suspect. We see this move. The only move that we really saw that was very expansive was CDTX, and I don't even know if it's gonna stay up here. Moved $100 from 100 to 218, and on almost no volume, no real trading, just popping around. So other than that, everything's suspect. Let my scanners do their job and see what they can pull out, man, because these scans are looking real questionable right now. What is this talking about? KimView. Okay, we got another little video update. Let's see what this is talking about. Where'd it go? All right, refresh. So this is Kimberly Clark and venue overlap is what I'm trying to get to play, but it is I have ad blockers on Yahoo Finance, so it's probably why it's kind of acting crazy. A lot of times I'm just not gonna turn them off because then I'm gonna have to turn them all back on.
Probably the most important pieces were our AI orders. We typically talk about AI infrastructure and how we're doing over there because there's such a massive build out that's happening with hyperscalers and beyond. And we had last year we had guided for $1 billion in orders. We ended the year at $2 billion, so we were 100% over. And this year, in the first quarter alone, apples to apples, we have 1.3 billion in infrastructure orders from hyperscale customers. So that was certainly exciting, and the momentum continues, and we are. There's a lot of innovation going on at Cisco, which is the core foundation of why we're seeing good results.
Looking ahead to the year coming up, is that where the lion's share of your revenue will continue to come from, do you think?
Not the lion's share, because it's still like we have a pretty large, set of businesses. And in fact, one of the things I didn't mention was we have had a full lineup of our campus and branch networking refresh. And what we're starting to see is that business in the refresh cycle is actually moving faster than the previous kind of refresh cycle had moved as well. So you're starting to see some pretty positive results across the board, not just on the AI infrastructure side, but of course, as you know, there's a massive AI infrastructure build out that's going on all throughout the world. We are engaged in a lot of those areas, and we will continue to hopefully see growth in those areas, plus our core businesses.
Now, Jeetu, in most sectors, in most industries, there are winning strategies and losing strategies. What about within AI? What are the winning strategies and what are the losing strategies? What should investors be really careful of?
The way that I think about this, it's overstating the obvious, but it's actually true, and it's surprising how few people do it, is you just can't sit on the sidelines right now, and you have to get enough of an instinct and a texture of what's going on in the market. So when we do studies, what we find is that there's a large percentage of companies that are starting to experiment with AI, but the ones that are getting the best results out of it are the ones that have been at it the longest. Because this isn't like the first time you use these tools, it's going to be revolutionary. You have to get good at it, like anything else. And so sitting on the sidelines is exactly the wrong strategy. Jump in, experiment, and get your organizations to have a base level of dexterity. Ramzan, you and I have talked about this. There's only going to be two kinds of companies in the world. Ones that are dexterous with the use of AI, and others that are really going to struggle for relevance. And so everyone should actually start to get the mileage on the experience.
But some investors might think they've missed the boat, that they might have got in. They're seeing this AI, this growth in AI, and thinking, hang on a minute, we're way behind. It's too late for us. But do you think there are some big players out there that are coming?
I always give this analogy, and given the fact that you're from England, I won't give you a baseball analogy, I'll give you a cricket analogy. But if we have a 50-over match, we're in probably over 2 or 3. So we're in early days still. I feel like we're definitely not too late. In fact, there's a lot of kind of fear of, is this a bubble? Is this going to be too kind of sporadic? You'll always see in a platform shift like this that there's going to be some level of frothiness in some companies' valuations, but the secular shift that's happening right now, and when you start to see the entire industry experiencing a platform shift, I feel like we're in the very early days. And in fact, there is a very plausible theory that we might be underestimating the demand signal, not overestimating it.
So you're not worried about a repeat of the dot-com bubble bursting with AI? You think that we're safe from that?
I think there's always going to be companies that are going to be frothy, but just like in the dot-com bubble, there was a massive shift that happened with the internet. You will see a very, very similar shift with AI, but there'll always be companies that are frothy, and there's going to be a lot of experimentation that goes on. And in that experimentation that goes on, not every company is going to be successful, but what you are seeing is a fundamental momentum that is going to be sustained. I don't think this is going to be a blip that just goes away over time.
I just want to look at data centers. I know you're heavily involved in that. Is there enough energy to keep these, grow these data centers that are desperately needed?
I think you hit the nail on the head. If I were to think about AI and take a step back, we see 3 major constraints with AI. The first one is the infrastructure constraint, which is what you're talking about. We just simply don't have enough power, compute capacity, or network bandwidth in the world to satiate the needs of AI. And so we have to make sure that actually gets sorted out. There's also another kind of shortage, which is the process for permitting and building out the shells themselves takes a certain amount of time. So there's limits of physics over there as well. Number two, there's a trust deficit. If people don't trust these systems, they're not going to use them. And so you have to make sure that safety and security become prerequisites for adoption. And then number three is that there's a data gap. We have trained these models on human-generated data that's publicly available on the internet. And what we are now starting to find is publicly available human-generated data we're running out of to continue to keep training these models. But the good news is synthetic data and machine data, there's still plenty of that. And then every organization has their own proprietary data that'll get these models better. So those are the three major constraints. It turns out, Ramzan, that Cisco happens to be squarely in the midst of helping solve each one of those three. So we find ourselves in a pretty fortunate position here.
And Jeetu, I ask you this question every time you're on. What's the exclusive for me?
Here's an exclusive I'll give you, is that our pace of innovation is only going to accelerate moving forward. We've probably innovated more in the past 15 months than we have the previous decade combined. And I think this is the slowest you'll see innovation at Cisco over the course of the next decade.
Jeetu Patel from Cisco, president of Cisco.
All right. So let's jump over here to the high floats. We got some new additions. It's like NVIDIA. So these are the top 10 high float movers that can move with range. NVIDIA, Tesla, leading the day with 6 million. So they've already got more volume than the top low floats, right? Except for Xpons. These other ones, Acon, Gorvin, they're 4 million, 5 million. And these higher float or higher market cap stocks are outweighing them. So we said NVIDIA, Tesla, Irene, Palantir. Then we had some new ones popping here. MBIS, Circle, Crowd. Wait, what is CRWV? CRWV. Or CoreWeave. CoreWeave is CRWV. And then Hood, Robinhood. But we can see where that volume is flowing. NVIDIA and Tesla off the rip. We just got an addition on the low floats just came in. So we have TRNR just got added, getting some trading there. TRNR only up 5%. It must have did a round trip. It had to do a round trip. Let me go ahead and click on that. Yep, TRNR did a round trip. It just popped up and was at what, 263, went up there to 349, and then right back down to 4%. So that is not great for it. But TRNR, it does have a little bit of news on the day. It says earnings scheduled for November 14th, which is today. Company. No. This is a broader. This got a bunch of tickers in it. Let me see. What's the actual? So it says they report third quarter 2025 results with 139 year-over-year growth. Reiterates 2025 pro forma revenue guidance of 80 million. Okay. Interactive Street, they beat their previous Q3 EPS. Looking right here, beat their previous Q3 EPS 3.11. It beats 4.90 estimate. Sales 4.8 million and a wait. Why did it say beats? Okay, Interactive Street Q3 EPS of 3.11 beats. Okay, so it said it missed that. Missed a 12 million estimate. My bad. That's a miss. Okay, that's why I did a round trip. That's a miss right there, boys. So all the way back down to where it started. So this is what the low floats is looking like. It's not really on par. It was just up like 30-something%, and now it's all the way back down to 1%. I'm like, you gotta watch for that structure, man. You gotta watch that structure. All right, the Circle is now green on the day. So it's one of the few, the proud. So let's go look at Circle. Why? Look at that move. Circle made a move down with the, whoops, let me go to 15 minutes. This is tripping. Okay, Circle made a move down and has been trending down with the market. And now today we see a nice little uptick from 80 to 83. Circle moves about $8.97 per day, average true range. And today it's moved from 80 to 83. And I don't know if, see, the thing about ATR, it's calculated on the last 60 days. So you have to, yes, it can move, you know, a total of whatever dollars in a day, but it may not all be in one direction. You know what I'm saying? Like it could be $1 up and then $7 down. You know, it could be a mix up of movement. Just because the ATR is $8.97 doesn't mean it's all going to be in one way, one direction. All right, let's go back over here. NVIDIA. Okay, this was one I want to look at.
Kenvue just inked a deal with Kimberly-Clark, $48.7 billion. You were involved with Kenvue. Do you like that deal?
I love the deal. I absolutely love the deal. So Kenvue, we got involved in Kenvue, amazing brands, the best brands in consumer health. So Aveeno, Neutrogena, Band-Aid, Listerine, Sudafed, Motrin, and then Tylenol.
All the stuff in our closets.
And then Tylenol. And it's amazing. The brands are absolutely amazing. Kimberly-Clark, also amazing brands. Huggies, Kleenex, amazing brands. I think what people don't exactly understand about this combination, and I think they will. I think they're overly focused on what's going on with Tylenol and acetaminophen, but is that the org structures are similar. So actually both businesses are organized where they're run by geographic P&Ls. And to some degree, they're limited in their degrees of freedom because each one of those geographies has to have enough scale to be able to operate. So by merging these companies together, nothing's easy, but it's a fairly easy integration in that you're actually merging two org structures together that overlap beautifully, in that you can put more products, more brands in each geography. And by doing that, you get more scale advantages in each geography, and also gives you more degrees of freedom to be able to prune the portfolio and take out the smallest SKUs with the lowest volumes, or even the smallest brands. It's kind of a nuts and bolts piece of the inside baseball of how companies operate and what happens, but the fit together of Kimberly-Clark and Kenvue is probably better than people think it is. It's really a very good transaction.
Key to unlocking, I think, the ultimate value of that deal for Kimberly-Clark, though, is how do they regain confidence or trust in Tylenol as a result of all these autism concerns?
Well, let's go back one more step, though. So the other thing that had to happen at Kenvue was an improvement in digital marketing and newer marketing, and Kimberly-Clark has also embarked on that transition, and they're further along than Kenvue was. So we're also expecting that they're going to be able to speed up our process at Kenvue, and combined there'll be a better marketing effort, especially for what should be the faster growing skin health and beauty brands. As it relates to acetaminophen and Tylenol, I don't know that there's a big change that we're seeing in brand trust as it relates to the actual sales. I mean, the business is fine. The business will be fine. This is a brand that's withstood other things that may have been even worse than this. And I think if you look at what's been put on the Kenvue website, there's a lot of information out there about why the company and many key opinion leaders and experts would say that Tylenol and acetaminophen is safe. So I think consumers know what they want to take and what they want to use in their closet or in their pantry or in their medicine cabinet, as you mentioned, and I think they feel comfortable with Tylenol.
How did you know that would be a good target? Like, what did you do? You assemble your team in a room and say, okay, Kenvue. Like, how'd you know? Like, how'd you know?
Yeah, we throw some darts.
You said that, not me, all right? I didn't say that.
What we do is a few different things. For each industry, I mean, I kind of alluded to it before, but for each industry, we're looking at a spread of the different companies that participate in that industry. And we're focused on the ones that have lower margins and lower multiples and trying to figure out if they deserve to have lower margins and lower multiples. You mentioned Darden before. When we first invested in Darden, their margins were worse than their peers and their multiple was worse than their peers. And then we looked at it and we said, that doesn't make any sense. Their actual assets are better. They have better brands. They should be a leader in restaurants. So we love that. And then when you look at Kenvue, their margins and their growth rate were lower than their peers and their multiple were lower than their peers, but these are the best brands in the space. Doesn't make sense. There's no structural disadvantage. If anything, there should be a structural advantage. That's what gets us excited. And then when you layer on to that calls we might get from other people who own the stock who are frustrated, and then you look into it and you say, well, it was a spin-off from J&J and I'm not sure the management team is exactly best suited to be able to create a lot of value for the company. You start to triangulate around an amazing opportunity.
Kenvue just.
So
Your outlook for the.
I'm gonna have to look into Kenvue over there, see what it's talking about. Dividends. It is a dividend paying stock. Where is my watch list? Yeah. Okay, let me add Kenvue there. Then let's go over here to where was that? High floats, yeah. Okay. So yeah, dividend paying stock there on Kenvue. Looks like it does 20 cents quarterly. Or no, am I tripping? 20 cents qualified quarterly, yeah. So payout amount about 20 cents. And like last year it did 82 cents in total, 81 cents. So that's pretty good. We'll see about that. They're still trying to figure out Tylenol. I don't know where they're gonna go with that, but people have been using Tylenol for so long. That's the issue. Like people still probably gonna have Tylenol in their closet just sitting there that they forgot about for years to come. US praise talks. Okay. Anyway, back over here to low floats. Low floats are still looking dead in the water. High floats, we got Nvidia still pumping out and just absorbing volume here. And that's what we don't want to see as small cap traders, because if this is happening, it might be a bad day for small caps. There's a lot of eyes over here. I don't care if they're going short. I don't care if they're going long. If the eyes are over here, small caps are going to suffer. Nvidia, Tesla, Palantir. All right, well, I pretty much seen what I need to see for today. Today is looking pretty bearish. We haven't had any small caps that have come up, and I don't think they're going to, because it's I mean, maybe they will. Maybe it will be a Freaky Friday just like the rest of them, but there's just so much emphasis on these AI stocks right now. And this, looking at the prices and where they fall into, people could see this as some type of discount. They'd be like, oh, Nvidia's 181. Oh boy, let's go buy that. So it's one of those things where, I'm not sure. I'm not sure that people are going to be ready to get up off of those stocks so easily, especially in the small caps with all of these cheaper stocks moving. You got penny stocks out here that are up here on this scanner before higher price ones. So it's like, yeah, the value just isn't really there. Yesterday, I said I was okay with a no trade day, but then I saw LVLU come up and I was like, yeah, let's go ahead and get it. But today, yeah, I'm really okay with the no trade day. This market is not playing. It is not playing at all. I'm trying to be green and stay green. I'm already green, but trying to stay green. We got what? This is November, December. We got one more month in the year. Like literally, I mean, it's just flew by. We're about to be in 2026. So closing out the year, nice and green and just chilling, letting it roll out. But this sell off at the end of the year is kind of affecting my portfolios for sure. And I'm still looking to add into things for the upcoming year. I kind of want to see what happens in January when they actually go through with the healthcare deal, January 26th or 30th or whenever it's supposed to be. That's going to be some more cannon fodder out there to kind of spur the next move in the market. But we'll see. We shall see. Anyway, I'm about to zoom out of here. Appreciate you guys for tuning in. Like I said, these days like this where the red is the focus, I just don't feel super confident in anything I'm seeing right now. Like Hebrew said, the market is shaky. It is shaky. And when she gets shaky like that, it's kind of time to put the brakes on a little bit and reevaluate. All right, well, yep, that's it for me today. Appreciate you guys once again. And as always, I'll see you guys in the next one on Monday morning, pre-market. We'll see what's going on, see if any new topics can come out, and continue to look to be green in these last 2 weeks or last 2 weeks of the month. Just about, yeah, last 2 weeks of the month. Just pulling out some green weeks and not trying to blow any, $200, $300 losses. That's going to take us down forever. Yeah, trying to shake money out of my pants. And I'm just like, man, I got my belt buckled, my chastity belt. I ain't going, bro. I got crossed legs. I'm in a straitjacket. You ain't touching me. But anyway, I'm getting on down. Appreciate you guys once again. Keep your head on the swivel. You're going to end up trading today. And as always, we do have a Discord, free Discord. So you can jump in there. That's where we continue conversations. Usually we're in there a lot heavier when there's something to trade. When there's nothing to trade, it's like, what are we even talking about? Now, we could discuss dividends and things outside of small caps, but, longer term portfolios, longer term plays or strategy. If you want to, we can always do that. If you want to see, how I have my setup or something like that, we can do a video call and I can show you everything that I got right here. And, just that kind of stuff. Help you set up TOS if you're using TOS, if you're using something else and you're thinking about switching to something free, you're tired of paying fees and stuff like that. Well, TOS is here. Even the pros, the professional traders still use TOS. It has one of the best charting softwares that there is, especially for it to be free software. So, I'm like, look, with all the pros and cons, I'm okay. I'm not doing hyper, I'm not in and out and in and out and in and out. I'm looking for structure. I'm taking my time. So I really don't need those fast type scalps. I'd rather buy lows and get the move higher, but it is what it is. We kind of just take it how it comes. But anyway, that is it for me today. And as always, I'll see you guys in the next one. Peace.